Okay, so the question that this member asked was, um how to interpret some of the language or stuff that I use. Right. So one example is, let's say if I were to say 840 break to scalp, right? If I would say 840 break to scalp, okay, then it means that I'm taking a play when it breaks over 840. Okay. Um Not before, not I'm not in at all. I'm waiting for the 840 breakout to play. So I'll give you guys one example, right? It's the same thing. The numbers don't change. Okay, it's just how this is gonna be like. Okay, so let's say for example over here, if I were to say CC 225 break, right? It just means that I'm waiting for CC to break 225 before I take an entry. Okay, it doesn't mean that I'm already in waiting for this to break 225 and more. Okay, I'm waiting for this to break 225 before I take my entry. So if we look at what happened to CC, right? It popped up to 214. Okay, it never broke 225. So there is no play over here. All right, it doesn't mean that I'm already in. Okay, and I'm looking for 225 and more. No, right? It means that I'm watching for this to break 225 before we take our entries. Okay, remember that. Okay, so the next one over here is NVVE 330 break to scalp, right? So we look at NVVE over here. All right. So once we've identified our level, okay, we draw it over here, 330. Okay. So over here, right, I'm waiting for this to break 330 before I take my entries. So this is not okay. And let's say if even if let's say if I were to phrase it a little differently, I say 320 break. If I were to say 320 break, right, it means that I'm not, even if this thing that go over 320, right, there is no candle close at all. So this is not a breakout. So even if the price did go above 320, right, I'm not taking it over here because there is no breakout. I'm waiting for a candle to close over it, right? So in this sense over here, when I say 330 breakout, you can see that this is the candle that closed above 330 on the 1 minute chart. All the reference is going to be used on the 1 minute chart. We take our entries on the next candle, not on this candle, but on the next candle. All right. So it can be around 339 all the way down to 330 and stuff. So long as it stays above 330, right, your entries are there. And your stop loss is going to be under 330. Okay, unless I specify otherwise. If I were to say 330 breakout, stop loss under $3, then yes, it breaks 330, you take your entries and your dips, stop loss is under $3. Okay, but if I say nothing, if I just say 330 break to scalp, then we take our entries above 330. All right, this is the candle that break out from it. We take our entries on the next candle, okay, and then have a stop loss under 330 and look to scalp the move up. Right, so it moves, it makes new highs over here. You can take some profits here, but then if it loses 330 right here, you can see that prices went down, candle broke down, you close it out over here immediately. All right, so you keep it very, very tight. Okay, there is no, oh, I'm holding the hope it recovers and whatnot. No. Okay, because sometimes they don't recover and you don't want to be holding this at 330 when this thing's at 155 right now. Okay, so if I say again, if I say 330 break, right? These are the things to note to understand. Number one, we look at this is all reference to the 1 minute chart. Number two, the candle has to close above 330 to confirm the breakout. Then I can take my entries after that candle. After the next candle opens up. My stop loss will be under 330 unless otherwise specified. Okay, one example as well is going to be ASST, right? So over here, ASST, 840 break to scalp. Now you see this time, I told you guys 810 stop loss. So when it breaks 840, you take your entries and your stop loss is under 810. It's no longer under 840. If I don't say this word over here, right? If I don't say this over here, okay? I just say 840 to scalp. Then yes, your stop loss is under 840. But if I say stop loss on 810, then your stop loss will be under 810. So now let's look at how this is going to look like on the 1 minute chart on the ASST, right? So ASST right over here, 840. See that? Okay. See 840 right there, right? So price broke out from it, 840. Take your entries at 840 over here. But this time your stop loss is not under 840, it's under what? 8 810. Right? Your stop loss is not under 810. So anywhere between, the breakout zones all the way down to dips and stuff is okay for entries. And then obviously if it makes new highs, right, then you take your profits. Now, when it makes new highs over here, or when it goes up to like profit scaling levels, when it goes back down, it doesn't mean that you can add it anymore. Okay, this is the breakout move that we want, right? If it goes back down to somewhere around near like mid to, back to the 840 to 810 breakout area, right? It doesn't mean you can add it. I mean, if you want, you can, but it's a coincidence if it does move. Right? Because when we take our profits, we always raise our stops up as well accordingly. Right? Just because it drops back to your previous add, doesn't mean you can add it, unless I say play around dips. Okay, if not, then we just take it as this, and you can see this thing went all the way to 980. All right, one more example over here for ASST again. There we go. 610 break, stop loss under 575. So you see same thing, right? 610 breakout, stop loss under 575. That means the stop loss is under 575. But if I do not say this, if I do not include this sentence here, then yes, the stop loss will be under 610. Right? If I don't put this sentence over here, then the stop loss will be under 610. So what happened over here is this, right? 610. Price, the candle halted up, but price opened up above 610. Take your entries and dips, stop loss under 575, and you can see it went up to $8 and went up to like 8 something. Okay, all right. So that's the one of the question that the guy had. Okay, yeah. So if I were to say, hold on. Okay, so if I were to say, I'm looking at, if I were to say I'm looking at, let's say right now, if I were to say this one, okay, maybe I say, I'm watching 870 breakout for something, for example, right? Then obviously, when the price hits this over here, there is no breakout at all because there is no candle close above it. That's it. Okay, yeah. The whole point of breakout plays is very, it's good because it helps you to minimize risk, especially when you're chasing something that runs really quickly, right? You don't want to be adding it at the top without any sort of plan, right? Because some of these plays, when they run up, they might continue going up higher, but obviously it's riskier, but they could still continue going up higher, right? But you don't want to be caught, just buying without any sort of clear plan over here. So still very important for you guys to kind of keep track of this. Okay, that's the whole point of breakout plays. It's so that you guys can still have a piece of the pie if you guys are missing out on potential plays, right? But still keep your risk tight. Okay, because some plays they go up, right? There is no pullback, just maybe just a minor light, and then they continue going up again, right? And you don't want to miss out that entire move. Okay, yeah, all right. So that's the first question the guy has. Now let's go through a couple of questions. You guys probably type it out. All right, thank you, Gigi. Thank you for the kind words. Yeah, you've been trading longer than me. That's impressive. Respect. Can you go over how you see rotations in volume when they happen? Okay, so very simple. This is so I'll give you guys a very good example. I'll give you guys a very good example for Friday, and that's one of the main decisions that I made, on NVDE and S whatever. Okay, let's see. All right, 1 second. Okay, so on Friday, all right, which is yesterday, we had 2 Bitcoin PR runs. Okay, one of them was SRXH, honestly impressive move, right? And the other one was NVDE. Okay, so SRXH did this. Crazy, right? 62 cents to 146. This is an impressive move. Okay. And then NVDE also had the same news. Now, if NVDE didn't drop this news over here, right, there probably wouldn't have any sort of volume on this. And we might see a much different situation happening for SRXH. Okay, let me just put the chart side by side for a bit. Okay, so this is the chart for NVP. Let me just set this for a bit. Okay, there we go. All right, so this is NVVE, right? This is SRXH. Now, remember this, guys. When there are two tickers with the same news, okay, when there are two tickers with the same news, it's very important for you guys to identify what is the relationship between those two tickers first. Because this is not 2020 anymore, right? When one ticker runs, the other one will have to die because volume is limited, right? There isn't going to be a situation where both ticker of the same type of PR is going to go, right? So this is where there are many different factors to come in, right? What is the float for this ticker? What is the news for this ticker, right? Which one has much better volume and whatnot? And if you look at the NVDE and SRXH, right? If you just go over the Finviz real quick, okay, you can see that SRXH has a market cap of 24 million shares, right? And sorry, $24 million. Okay, market cap of 24 million, and then the float is 28.85 shares, right? So for those of you guys who are new to trading, you guys don't know what float is, right? Basically, float, right? We'll just treat it as a way so you guys understand. Float is the mass of the stock, right? So the higher the float, the harder it is for you to have a very nice push. Okay, so that's why you see tickers like NXXT, sorry, NXTT, sorry, right, go crazy. Now this float information over here is inaccurate. This is it's very small. It's not like that. But we look at tickers like NVVE, right? Small float, 2.34 million float. So you translate this to 2.34 kilograms, right? It's very, very light, right? You look at ASST as well, right? 12.64 million, pretty big, all right? It's 12 kg. It's not as heavy, right? But it's still a little bit bigger, okay? But you compare it to tickers like Apple, okay? All these tickers have really big float. This is 14.9, not million, but billion. So that's why you don't see, drastic or dramatic moves on stocks like Apple, unless of course there is news, right? Then that's different, right? But in a day-to-day perspective, then you don't see that sort of drastic drastic moves and whatnot. Right? We look at there was another Chinese thing that was running, right? It was ABTS, right? Remember that? There was ABTS. Look at the float for this, right? This is what 1.95 kilograms. It's 1.95 million, but we just for you guys to understand, it's 1.95 kilograms. It's very light. So that's why it's able to make moves like this in just a very short period of time. You don't never see this kind of percentage move like Apple doing it, because this is a very light ticker. But as it is, if the ticker is light, right, remember that there's always two sides to a coin. When the ticker can go up quick, it can go down quick as well. Right, so back to the topic at hand, SRXH has a much heavier float than NVVE. Right, so now it's where you have to make a decision. All right, which one is gonna take the trade, or which one's gonna be the winner of market open? And if you look at this gray box over here, this is basically this gray box. Okay, look at this partition over here, right? This is the entire pre-market and after hour session. After hour sessions over here. Right, dotted line always is pre-market, and then this, after this crosses over, everything's market open. So same thing over here, right? So now before market opens up, you can clearly see that SRXH is the one that had a lot of potential. But I told this to you guys before, right? You don't want to be treating whatever happens in pre-market as a prerequisite of what's going to happen for market open. What do I mean by that? Right, so what I mean is just because it ran hard in pre-market, it doesn't mean it's going to run hard in market open, because market open flow is very, very different. Right, I don't care how hard it ran in pre-market. It does not matter if the volume for market open is ass. It's trash. Right, so you wait. right? So that's why sometimes when you take trades into market open, it can be a little bit riskier because you really don't know what's going to run, right? There's no way. I mean, this is all we have, right? Just by look at the chart itself, right? You can clearly tell me that this looks really good, right? But this one is under VWAP and stuff. This is above VWAP and all that, right? But if you see on open, this thing halted down. Now, we know that it's either going to be between this and this. And we look at the relationship of these tickers as well, right? The run started happening over here at 8:49 a.m. Eastern, but it started declining at 9 a.m. Eastern, right? Look at the time at the bottom. It started declining at 9 a.m. Eastern all the way down. Why? Because at 9 a.m., NVD had this news. Do you see the relationship? It's inversely proportionate, right? So you see, for these 2 minutes, right? 9 to 9:01, price is going down, right? From 9 to 9:01, price is going down, right? From 9 to 9:01, price is going up. And then 9:02 to 9:03, price goes down. 9:02 to 9:03, price goes up. So we can clearly see that this and this relationship is reversed, right? It's inversely related. Okay, so what does that mean? It means that both of them have the same PR, but when one goes up, the other one goes down. Maybe this is the reason why this thing went down and this thing goes up, right? So if we look at the time over here, this was at what? 9:25. At 9:25, you can see that this is what happens after. Okay, after 9:25, which is right here, it went up. After 9:25, what happened? It went down. So we can clearly see that there is the relationship between these two tickers over here, right? So we expect, if this thing has strong volume to open, right? We don't probably NVV is not going to go, right? And that's what I told you guys, right? That's what I told you guys, isn't it? Over here, right? If today's theme is about the crypto, volume will just be rotating between this and SRXH until one of them becomes the winner. So when on open, this thing halted down. So when this thing halts down, if we look at the relationship between these two tickers since pre-market, I think it's a high chance that I can say, okay, my thesis is this. If SRXH halted down, when their relationship for the price has been shown to be inverse throughout the entirety of pre-market, then I could expect this to make moves, right? So this is what I talk about it. Volume rotation. Volume is rotating out over here into something else over here. See that? Price went down, price went up. This is where, you get your live example of how volume rotation works, right? You got to understand the theme of the ticker first, right? Because again, I told you guys this before, you can have the best technical analysis and whatnot, right? But if you're not focusing on the right tickers with the right volume or whatever the case is, it does not matter, right? Maybe this would work for tickers like Google, Microsoft, because I always say this, right? There is never going to be another Google every single day. But when it comes to small caps, right? Every single day we just have very different tickers and different themes as well. So into open, this thing both had Treasury news, and we know recently Treasury news has been pretty hot, which is what caused KIDZ to run up high, which is what caused ASST to run up high, right? And these two are showing relative strength according to the Treasury crypto news as well. So the top focus is going to be on these two, right? So obviously when this thing halted down, right? And then, this thing has the same relationship between this, inversely related. So when this thing goes down, it means that this thing has a high chance of going up. It's not a guarantee, which is why we always have our stop loss in case nothing happens. So from here, right, when this thing opened up and continued going down, this thing went up. Volume rotation. And then obviously, from here, this thing might recover. We don't know, right? Because when we see this is all we see, right? Maybe it recovers over here. But if it doesn't, if it continues going all the way down, then this is going to continue going all the way up, right? Unless midday, there is something else that starts moving very strongly, then yes, it might take away some bit of volume over here. Because I think midday, there was a little bit of run on ASST after that, right? There was a little bit of run on ASST. There we go. A little bit of recovery here, right? Which is why we saw maybe a little bit of pullbacks over here. Okay, but then when this thing dropped, let me see the time. Yeah, when this thing started dropping a little bit, maybe the volume will take back into this or whatnot. Right, but I think at the end of the day, it was also the NXXT, sorry, NXTT that was running as well. Hold on one second. So over here, you see that there is the price going all the way up, right? And then obviously this one, had so much volume, which is why probably this one went down. And I can say one thing for sure is that even though we did have a breakout over here and a flag breakout as well, right? Which is good. But probably the only reason why this thing didn't really fall through is probably because the Chinese names were just triggering everything. Right? Because at the end of the day, the theme rotated, right? It was all about the treasury, crypto, and whatnot, but then it just became a Chinese party because of NXTT, right? Because ITP came along after that, right? PSIG, tried to do something as well. And then ABTS also came along as well. I mean, all these movements over here, and they all make drastic movements. There's no way it's not going to affect, the volume that we have for the day. Okay? So, yeah. Yeah, I mean, Mafia, I just went through the volume mutation example over here. I think this is as clear as it gets. I think the MVVE and the what's that SRXH is perfect examples on this. All right, the timing couldn't even be any better, right? This is as clear as you're gonna get, no? Right? So I mean, see the timing over here, right? These two. Okay, these two. Right? 9 o'clock, 9:01. 9 o'clock, 9:01. Do you see the difference? And they both have the same sector type of news. How did you identify your exit? So I sell my shares based on potential resistance levels. Now, obviously, you can never really be like, oh, I'm going to hold on to this, blah, 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 and whatnot, because we never really know what's going to happen, right? Because there is no indicator, no chart, no pattern that can tell you where the stock is going to go. Okay, but in a sense, if you're sitting inside a trade and if it doesn't break down, right, you can always leave some shares for more. Okay, so one example is this. Okay, let's say if I was okay, so look, we take MVVE for example, right? So MVVE, I got back in at 1.73, stop loss on the 155. Okay, because I see the volume mutation. So 173, I got back in over here, right? I got back in over here because I saw the thing halted down, right? I got back in over here, stop loss on the 155, right? Because it's my current base. Okay. Now, where do you think my first profit-taking resistance level is going to be? It's going to be around $2 level. Because this is where the price was rejecting a little bit. I cannot assume that this is going to break out from it. Because what if it touches this and goes down? And then my next level is going to be this entire area over here as well. Right? I might not be taking profits over here because I've taken my profits over here, right? And if this is strong and I see, like you see, for example, like this, right? I see, okay, you know what? This is a strong resistance level, right? I take some profits over here just to de-risk a little bit. Okay, but then I see a very strong breakout of it and price basing on this line over here. Now I'm looking to see if we can get a nice breakout of this high because SRXH is still continuing to drop. And I see nothing else really running in the market at the point of time, right? There's a high probability that this thing might go up, right? So we broke up over here and the rest was just history. So anything else onwards is like, oh, how do I know, where to sell what now? How do I know to sell at 385? Now, the truth is none of us can ever know that. And that is not a good mindset to have as well, right? If you can get a move from, 170s to 260s over here, that is good. If you've hit your targets for the day, you're done, right? Again, I always stress this. Your goal as a day trader is not to catch the 500% movers, is to make the money that you aim to make, and that's it. Obviously, realistic numbers, right? Your goal is not to catch the 500% movers. No, because that is not normal, right? Plays like NXTT is not normal. We don't see that on a day-to-day basis. It's a crazy move, right? But how many of you guys would, not be worried? Let's say you guys are in at 30 cents, right? How many of you guys will actually hold full size to $5? Because that's crazy. It's not realistic. Okay, so But let's say you take most of your profits over here. You only have 20% left, right? Your 20%, what you can do is set your stop loss at entry so it becomes risk-free and go about on your day, right? Don't stress out. Whatever happens, happens. If it happens, if it triggers your stop loss, so be it, right? You've secured very good profits over here. If it doesn't and it continues going higher and you want to slowly scale your remaining 20%, go for it, right? A lot of you guys over here underestimate what 20% can do. And I just showed you guys an example. Let's just say, this thing did actually make a move like NXTT and goes to like $6, and you have 20% left, right, at 170 something. That's a lot. The profits that you're gonna make off this 20% shares might even be more than the one that you scale at 80%. But you see, the ones you scale at 80% is still good profits. Now, this 20% extra profit is kind of like a bonus for you. Do you have to stress about re-entries? No. But because you're in it, you're not gonna FOMO when the price goes up. A lot of the people, they make mistakes when they FOMO when the price goes up, right? Because they close out the entire position already, they want to continue being in it. So they chase when the price goes up, and unfortunately, some of them don't continue through, and it drops. Right? And then what happens? You give back some profits, and you'll be like, shit, I shouldn't have done this, and then you start revenge trading, and then what happens? There's a snowball effect that brings your green trade into red. But when you have 20% inside, you won't feel as much FOMO because you know you have shares in. You know that you're still in for the ride up. So it's not just to retain profits over here, but it's psychologically speaking, it also helps you guys not chase plays because you have positions inside. So how high it goes, I don't know, right? I will never know how high it's gonna go. I'll never know where it's gonna top out and swap, right? So you just gotta come to terms to a point where if you have like 5% left or 10% left, you don't want to sell until it really gets to like double digits type shit, then go for it. But if not, always be happy with the profits you secure. Because no one can know where the top of the stock is going to be. Okay, but if you ask just very simple general question how to identify exits, then this is the first level here. And then you can start to look for levels in the daily chart just to see, there's any sort of I'm just gonna draw it from the start over here, yeah. Okay, so if I look at my daily chart over here, I see okay. I have a strong resistance here. Shit, no. I have strong resistance here. Okay, I have one strong resistance here. I'm going to remove the EMA so it's easier for you guys to see. I have one strong resistance here, right? I have a small gap over here as well in the market because gaps are where price will try to fill, right? And then I have strong support level here where price generally bounces off pretty a couple of times as well, right? So these are just 3 zones that I have. So if I go back to the 1-minute chart, okay, you can see this is why, right? The first breakout is. You see, I did not draw the lines over here from the 1-minute chart. I drew it from the daily chart, and you can see, it worked out pretty well. So if let's say I would take my entries at 170s, right? My first level is probably going to be around 230, somewhere near there. Or in that sense, I could use this first. My first scale would be around 2 or something, and then 230 will be next, right? Anywhere near there. And then after it breaks out, I'll see what happens. Okay, so just remember, I would never know, right? Because there's a high chance that this thing could have just done this and drop all the way down. But we'll never know that. Okay, we just have to trade what's given and what the situation calls for. Because if something else, if let's say NXT started its run over here, I'm pretty sure this thing wouldn't have been able to make the moves like that, right? Because people will all be flocking into NXT. See, it's very situational. There is no like perfect playbook, right? As to, this is how it's going to be every single day. No. Right? Every single day, things are going to be very different. Can you? Okay, hold on. I'll answer that question later. It's a little bit I'll go answer the simple ones first, right? When you scale out, do you have limit orders rest? No, I manually buy and sell all my position. I never ever set pre-sell orders because I've had a friend before. I told him that the target was 865. He set his target at 867. The price hit 866 and dumped from there. So he was 1 cent away from his sell order getting filled, and he was up, and he ended up being red on the trade because of 1 cent. And to me, I think that is just stupid. So no, I will manually watch my position. When I say my target is 230, I'm not selling exactly at 230. Anywhere near there, I'll start to trim some out already. New to trading started this week. I muted everyone except for you and Frankie until I get the hang of things. Currently trading over $1,000, so I can only do 1 or 2 trades a day. What trades do you recommend I trade? Maybe ones with good news, or do you want better plays differently? Now for me, most of the plays I take, or all the plays I take are plays that I think have potential. Obviously, I can be wrong. All right, I'm not, I'm not God. I can't see the future, but I will be wrong. But when I take a trade, it means that there's potential. Now, if you're under $1,000, my first suggestion for you is for you to get your account to a cash account, right? If you're under margin, all right, please change it. Okay, I think you should be on the cash account right now. So there's that. What trades do you recommend I trade? There is no right or wrong answer because some trades sometimes pre-market can be good, sometimes pre-market slow. Market open is where the action is at. Sometimes it's vice versa, right? So it's very situational again. Right? Again, there is no playbook where like this is the best time to trade. This is the best time to trade. This is the best time to trade and whatnot. Generally speaking, the best time to trade when there's high volume and stuff and high liquidity is going to be at 9:30 a.m. onwards because that's when the market opens up. Pre-market might get a little bit tough on the fills and whatnot, unless of course that ticker has been trading with a lot of volume. Okay, but I would say for you right now, Alan, right, get used to your trading setup. I'm not sure what you're using. If you're using Webull or Thinkorswim, these are the only ones that I recommend, right? With Active Trader, Turbo Trader function set up. Try to get used to your system and setup first, while you also try to get used to how trading is like, because you're new to trading, right? So get used to how trading is like, how it feels, right? How the speed is, how you should be doing. Ideally speaking, I would say if you can start with paper trading just to get the hang of things, right? But paper trading is good, but it's not good to the point because it doesn't really include emotions in it. And a lot of the times traders make mistakes by trading on emotions, and that's something that you can never practice when you use fake money, right? Because when you use fake money, when it drops, you're not going to care too much about it. But when you use real money, when it drops, some of you guys might even close out your position even before the stop loss hits because you're afraid of losing more money, right? And that's not good. And when you keep doing that, it just gives you micro cuts, and all these all do adds up into very, very big losses. So I don't word better plays differently, right? All my plays, all I take, I don't take plays unless they look good to me or they have potential. Right. So sometimes even the plays with good news doesn't matter. It depends on what the market is. Okay, Alan. Right. Like you see NXTT went from 39 cents to 28 cents to $5. There's no news for that. Right. But was that a good run? It was. Right. So news doesn't matter, it's where the volume is at. Right. I guess the only difference where I word things differently is if I were to say lotto size. Right. Now even if it's lotto size, right, I take it because it's potential. So basically, most of the plays I take, or if not all the plays I take, right, whether it's be lotto size or whatnot, is because there is potential. Because why would I take a play that does not have potential? You know what I mean? Right. So I would say your main goal is try to get the hang of things, get the hang of what trading is first, right? Get really immerse yourself into what trading is about, how it feels, in the system, how everything else goes, and then from there, while you join in the end of day session, you join this study sessions as well, right? And then slowly upgrade yourself from there. I would say that's the methodical approach to go. It's probably the best. For NVV EOD downtrend breakout, when do you realize the breakout become invalidated until you drop to so over here, right? Honestly, if let's say if you want to say the breakout becomes invalidated, it's when it loses this over here. When it loses this downtrend breakout move. I think you also have to understand that NXTT was running hard as well. So you gotta, you gotta be observant about what's running as well. Right. But the moment this thing couldn't really hold through 330, right? For me, it was just like, I don't think it's gonna go. I think because at this point in time, ABTS is running too. Right? If you look at the time over here, ABTX was running from at 3:37 p.m. Eastern, right, all the way to like 3:43. I think it was NVDE at 3:37 as well. Right, it's right here. You can see that, right? It started to drop down really hard at 3:36, 3:37 because ABTX was just going up. So yeah, it was the Chinese thing just took over at the end of the day, and NVV unfortunately wasn't Chinese, so we couldn't keep up. I saw you mention to someone this week about risk and that you should have known in front of risk calculations. So basically, if you have your account size, all right, if you have your account size, you should know how much you're willing to risk for each trade. So so some of you guys might be like, maybe you guys have different scaling strategies, but for me, let's just say based on my strategy, I always size it based on how much I'm willing to lose because this allows me to maximize the money I put inside the trade, right? So for me, if I have a set amount of value, right? Let's say if I were to say that my portfolio is let's say 10. We'll put like very simple numbers in here, right? Easy to calculate and stuff. My portfolio is $10,000, for example, okay? And I'm willing to risk maybe let's say 1% for each trade, all right? So that's equal to $100, right? So so that means that every single trade that I take, if it doesn't work out, I'll lose $100. I'll lose 1% of my account. So over here, right, I need to know how much I'm losing. So if let's say I'm risking a play that has a 10-cent risk, for example. All right, then if I were to calculate this, that means that I can afford 1,000 shares. Right, so because 1,000 shares, if I lose 10 cents per share, I'm gonna be losing $100. Right, 100 times 0.10. It's 100, right? So if I have 1,000 shares, I lose 10 cents a share. That is $100 loss, which is perfectly aligned to my strategy. And then if I have 20 cents, okay, probably it's gonna be half, 500 shares, right? Because I can afford. I have a bigger risk, so that equates to me being able to afford less shares. If I have 30 cents, then obviously that's going to be cut into half again, right? So so on and so forth. So I'm going to be having 275 shares in a sense, right? I'm going to be able to afford 275 shares. Is it? Let me see. Oh, not 275 shares. 333 shares. Sorry, my bad. So on and so forth. So for me, right now, I have the amount that I know. So I don't have to go ahead and calculate on the spot. If I am going to take a trade, okay, look, my entry is around 218, stop loss under $2. I can say, oh, this is around 20 cents risk. 500 shares it is then. I already know. It's already been calculated. So I don't have to spend my time be like, oh, how many shares can I buy? Because I already know beforehand. Yep. All right. So it's it's preset. Are you doing? No, I never average up. Unless I told you guys I'm in starter size and I'm waiting to add more on this breakout. Yes, if not, I usually don't average up. Because it fucks with your average, your good average if you average up. I don't like that. What real-time scanner do you usually use? Again, all right, the scanner I use is in the trading chat. It's nowhere else. All right. We have this feature. It's paid for you guys as well. Please go ahead and use it. All right. It's this thing called NunTioBot. Okay, this is a volume scanner. It's a new scanner, so you can use that. You don't have to pay for scanners anymore. Right, just use this over here. All right. So there is that. I'm pretty sure you guys are in the trading chat. You guys will know what I'm talking about. Yeah, all these are scanners, right? These are all volume scanners. See that? These are all volume scanners right here. Okay, so you can just use that. Right, you don't have to pay for extra stuff over here. And no, there is no website to find out which small cap tickers tend to move in sympathy to each other. At least not that I know of. Right. The only reason why I know about this is because, again, experience. I've been trading for years now. I know what tickers are sympathy to each other. Sometimes there will be new tickers that I'm not sure of. Right. Obviously, why the fuck would I know? But the ones that I've traded before, then yes, I will know, what, because I've seen the price action traded before. And you see, there's no way you can know that immediately other than spending time and having accumulated experience in the market. That is the best way to learn, right? Not books, not YouTube, real life, hands-on experience in the market. Yeah, I tell you, no books is gonna tell you, hey guys, or YouTube video is gonna tell you about trading, right? It'd be like, hey guys, Chinese names liquidate, so you gotta be careful. No trading books is gonna tell you that. No YouTube video is gonna tell you that, right? Only the market itself. When you trade it, when you have experience with it, that's where you'll learn. But I've seen many people got caught in the Chinese liquidation flush before, thinking that stock going from 1 to 20 is impressive, right? You think it's gonna go from 20 to 50, and then from 20 it goes out to 1. But because I'm pretty sure a lot of you guys over here might be like, oh my god, RGC is crazy. It went from $5 to $380. But I can tell you guys one thing, right? When this thing crash, it's gonna crash hard. Can this thing go to 1,000? Probably so, yeah. Probably so. But what if it doesn't? What if it just crashed from here? You don't want to be that one person holding this stock at whatever price it is, right? So you don't want to be that one person holding HKD. Remember that, right? You don't want to be that one person holding HKD at $2,000, because I can tell you for sure it's never gonna go back there anymore. Right? It was impressive too. Right? People was like, "Oh my god, this is crazy!" But look at what happened. Boom, crazy. Can you go order the lines and gaps you draw in the chart? Go back. Can you go? What do you mean? Can you go order the lines and gaps you draw? Oh wait, I don't understand. When I draw the line and stuff, they are automatically brought to the 1 minute chart. It's not. I don't have to draw a double. Oh, can you go over? Can you go over the lines? So, yeah, I mean, look, right? So I always like to look at areas of price action separation, because that is the defining pivot point to where the price is bullish and bearish, right? So if price is below that, bearish. If price breaks up from that, then we're in the bullish zone over here. So one key level of price action separation for me is going to be this, right? Because whenever price is above this line over here, right, it just trades in the upper quadrant of this area, right? All right, I'll trade in the upper quadrant of this area over here. But if it breaks down, once it breaks down, right, it just has resistance over here and it trades in the lower quadrant of this area over here. So this line for me is a pretty significant line, or you can kind of sort of say a breakout line. It's 243. I like to round up my numbers to 245, right? And then if you look back and see how this looks like in the 1 minute chart, all right, you can clearly see, all right, once it break out from you can see we have a nice push, right? Price is kind of holding on to this a little bit, okay? But it was trading around this level here, and then it suddenly went up. But this is a key level. When another level that I like to plot out, which is very simple, is going to be gaps, right? Where price between two candlesticks do not have any sort of candles, right? See that there's a gap right here. And gaps are something that I really love to see, because it's very easy to identify, and you can sort of know, right, what is that gap is going to be. If you're below the gap, then the gap will just act as resistance for you. And once you break out from it, you can kind of play around it and stuff, right? Obviously, add your EMAs according to the chart to know, where your bounce spots and whatnot. Because this ticker was bouncing off the 50 EMA, right? So over here, you can see the 50 EMA is holding up pretty well, and yeah. No. Frankie does the live trading. For me, I don't do live trading. All right, Frankie does live trading. I don't do live trading. Okay, so last question from OBS TKKL. Can you do a quick overview on your position sizing strategies? Do you size it differently for different setups? For the alerts and okay, so for the position sizing strategies, I think I just showed you guys already, right? About how I size in my stuff with the this one here, right? So it's up to you guys on how you guys want to set it. Okay, I would say that you should psychologically increase the risk, because some people may not be able to accept seeing the loss, and then they might end up just closing it out when the structure is still good, right? So if you're starting out 1%, I think it's good. Anything lower than 1% is a little bit too small. It's not worth it, right? So 1% is good, right? And then go according to how much you want to risk. Some people like risking 2%, right? Then go for it. Obviously, with 2%, then things are going to change up over here. This is going to be 2,000 shares. This is going to be 1,000 shares. This is going to be 666 shares, right? Obviously, no one ever buys fucking 666 shares. This is go like 665 or 660 or 670, right? A little bit off, it's fine. It's not going to blow up your account. But this way, you're sizing in based on how much you're willing to lose. You don't have to worry about your account being blown up, right? In a way, you are controlling the loss, which a lot of you guys over here don't have control over. Okay. And for the alerts, do you think we should take one entry and scale out or take starters? I never like taking starters unless I tell you guys I'm taking starters, right? If not, I usually just size in normally and then I'll just play it out. Because I mean, like if for example, if I say starters, it will be starters, right? Because I will tend to take dips. I think one example is in D, isn't it? I took starters over here initially, right? Over here. Yeah, I took starters, right? So starters for me is around 10 to 20% of my position. Now I want to play around dips, but the thing is, I had a change of plans. I closed off for a really, really small gain. And then you can see after that, I got back in again, right? But it wasn't starters anymore. Because starter size, it's just not going to give you much of profit, so it's pointless. Do you always take 80% at your target? No, I take around 30 to 50% depending on the market condition. I think but I would say that this is something that you have to come to terms with. Some people emotionally prefer to take 80%. And if that makes you comfortable, go for it. But at the end of the day, you want to be comfortable. Because if you're not comfortable trading, you're going to end up making very stupid decisions. For me, I found my sweet spot to be around 30 to 50%, but this is something you got to figure it out yourself. Right? How well do you trade when you scale 30 to 50%, and how well do you trade when you scale to 80%, right? You gotta log it down to see how the performance varies and stuff like that, and then stick to that one that obviously makes you better. Okay, all right. Okay, yeah, no, I don't know much about warrants. I don't really care too much about them as well. But so I think it's basically like areas where I think there's people that invested in it or bought it before whatever can redeem their shares or sell their shares and whatnot at that price, right? So it's kind of like a little bit like an offering or whatnot. But honestly, I'm a day trader, right? I don't care about shit like this. I just look at the chart, I look at the volume, I look at the price. That's all you need, right? If you tell me that NXT had warrants at $3, right? Who the fuck cares about that shit, right? No one fucking cares. Okay, if it's gonna go, it's gonna go. Now, all these over here are just additional, fancy terms. I don't even use that. It's not stopping me. When I buy something, I immediately share it with you guys. It's immediate. Right, so let me just when I buy something, I just share it immediately with you guys. I don't wait like 5 minutes. Once I see a setup, I get in, I alert. That's it. No need to wait. No. Why? Why do you want to pay attention to the cash the company has? You're not swinging it. You're day trading it, right? The volume is the one that pushed the price up, right? You don't have to pay attention to the cash the company has. I mean, you can sort of like be like, oh, this company has low cash and whatnot, and it might do an offering and stuff. But there are some companies with huge cash to do an offering. So at the end of the day, right, just trade it as it is. So what if the company has low cash, but then it goes from 1 to 5, you're gonna miss out the move from 1 to 5? Really? Doesn't make sense, right? Doesn't matter. Even if there's a reverse split coming up, it's not like it has split. It's just coming up. You know that doesn't change anything you're doing for the day itself. We're not looking to invest in these companies, guys. All right, we're looking to buy and sell them on the day itself, and maybe if they close strong, swing it and whatnot. So we don't really need to know if the company has good cash or whatnot, or we're also not even looking to swing them. We're looking to day trade them. So all this information over here, I would say irrelevant, not needed, useless. Okay, all right. I'll tell you guys, okay, what you need or what I use what I have when I day trade is the chart, the volume scanner in the Discord, my levels, and that's it. I don't care about warrants, I don't care about how much cash the company has. I don't care about all those because it does not help me at all. If I swing, probably so, but if not, it's a matter. Yeah, no. When offering comes, it will come, right? It's gonna be it happens. There are some companies that don't have offering huge amount of cash, but they still do offerings because maybe the management sucks. But you can't avoid that. And I mean, how often does that usually happen? You've been trading for like years now, right? I only can remember being caught in an offering position 2 to 3 times. After that, I don't. And how many stocks we trade a day? Right? This is 4 years. So it doesn't really happen on a on a day-to-day basis. The volume scanner is inside the Discord. It's in the trading chat. All these over here is all the volume scanner. Right? All these are the scanners over here. No, I would say 5 to 10 cent for a $1 stock is yes, right? But NVVE was 150 to one something. And I would one more thing I want you to guys to uh no, I don't use the scanners and brokers. It's dumb. One thing to kind of know that is that you gotta understand the range of the stock as well, right? The sticker can go from 123 to $2, right? I would say that 5 to 10 cents is really not a lot to the sticker. Unless, of course, this sticker went from like 60 cents to 80 cents, then obviously 10 cents is 50% of its range of move potential, right? But other than that, if this sticker has short range, what is 5 to 10 cents if it does actually continue going? It's not. It's gonna probably make a much bigger move than that. How do you know volume is coming in? You gotta watch the chart. You gotta watch the chart. You gotta watch the scanners. You gotta look at the. You gotta watch the chart. That's the only way, right? No one's gonna come to your house or bring your doorbell and be like, "Hey guys, hey, the volume's coming over here for this." You gotta watch the chart. Have you on to watch this? Look at the price, right? Obviously, when volume comes in, means price is gonna go up. That's what you know, right? Understanding, relationship between two tickers is also very important, right? What exactly you look at the stock and say it's the one? I would never ever guarantee that this is the one, but factors like uh, in the morning I went through with you guys the relationship between the tickers, whether it's an inverse relationship, right? The news, the volume, right? The structure. Is there anything else running? What's the common theme of the market? All these are factors that helps. MM. Oh, wait. So what? Option chain? What do you mean? Option chain? You mean this one here? This one here? You mean this? Buy and sell option. This one? I mean, just. I mean, so you go over to the option chain. If you want to look at the if let's say the alert is 175. If let's say I give you the alert, right? AAPL, or depending on how the analyst puts it out. Okay, 516, 195 put at 2.35, for example. This is the alert I'm going to send out, for example. All right. So like that. Okay. So you go over to check the ticker symbol, right? And then you look at the date. There are going to be multiple dates over here. Okay. So you look for the one that's the correct one. Open up the option chain for that. Right? Look for 195 puts. No, it's P. So it's puts. Right? So puts is gonna be here. Right? This is calls. This is puts. So you look at the puts column. Right? Then you look at the strike price is 195. Go to find 195 over here. And then we are buying the puts, right? So go over to this and then select how many options you want, right? How many contracts you want, and press confirm and send, and you can, and that's it. I mean, is it confusing enough? If let's say there isn't, it's not showing the chain that you're looking at, maybe because you only have 4, right? You just have to like go to strikes over here in the middle and be like, oh, 50. Or you want to show everything, you do all. It's gonna show you everything available. You can show one, you can show one as well. But I think it's yeah, drop me a DM, drop me a DM. What's your Discord ID? Drop me a DM. Actually, hold on one second. Okay. All right, guys, I think that's it for today. Hope you guys enjoyed the session here. Um, all right, enjoy the rest of the weekends. Yeah, I mean, if you just DM me if I have time, I'll reply. All right, because I have a lot of I'll show you guys like the stuff that I have. It's like some of it, and then like I have a whole lot. So, and I'm busy, you know. I gotta look at the tickets. I gotta look at I gotta I gotta trade. I gotta learn stuff. It's gonna be a lot of stuff to look at. All right, cheers, guys. Goodbye.